Yeah, this is a tough one, man, to unload. Obviously, it's a painful week, what we saw last week. So, yeah, we've owned it since January of 2018, roughly in the 180s. Big miss on the MAUs, miss on the DAUs. For me, this is a big-time engagement story. So almost 100% of their revenue is coming from advertisements. Yes, it was up 20% year over year, but the guidance wasn't great. So for us, and also thinking about the increased competition from other social media companies. So we had to unload it here and take the money elsewhere.
Yeah, 180s, so, $40 below where we're at. Now it's an interesting move. It says a lot about where I guess you think that this stock may go in the near term, sub 200. Pete, then I come to find out that you bought some Facebook February 235 puts today. Tell me about it.
Yeah. So I decided, Scott, that I wasn't really ready to bail on the stock. I know it's been a bad quarter, and Jason just did a great job of giving the analysis of exactly what they did, which was not very good. And a matter of fact, their focus is gone. They are not the Facebook they've been in previous quarters where they've absolutely crushed it. And we're talking about for years. I still have a chunk from when I got the stock on the IPO, Scott. So that gives you a little bit of an idea how long I've been riding on this horse. But the last week or so has not been good. It's been really, really brutal. And I made the decision. It was already gapped down, right? So it's been in this range, call it 220 to 235, more closer to the 220 than 235. But I decided to buy some puts. And the reason I did that was that at least gives me a stop out. That gives me basically an insurance policy. If it continues to go lower, I can sell it at that price. And obviously there is premiums involved and everything else, but that gives me at least the opportunity to hold on for a little while and see if there's any chance at all that this is a company that can turn itself around. Obviously, the quarter was terrible. I think they lost their focus. All the money being spent on Meta, that was the problem, I think, with the quarter, because not only did they focus on Meta by putting all their money there, but then they were losing, obviously, to YouTube and to TikTok and all of Snap and everybody else. And we saw the Snap earnings were outstanding. So this gives me a little bit of time to kind of watch things, see if I see any reason to still stay there. And if not, I can just exercise those puts and be gone.